Hi everyone, in today's video I'm going to answer the question, is Twilio's stock a buy? I'm going to be using my simplified 6-step framework to analyze that question, so let's get right into it. The first step in my framework considers customer value, and Twilio offers a popular technology that allows businesses to provide automated live customer support with an interactive chat feature. This lowers the costs for businesses to provide customer service, and so that's why they invest in purchasing this service from Twilio. As of the third quarter, Twilio had 280,000 customers. That was up from 250,000 from last year, so they're increasing their customer base. The net dollar retention was 122%. That means each customer is spending more with Twilio year over year. Any figure over 100% means an increase in spending from existing customers. Overall revenue increased from 399 million to 2.8 billion from 2017 to 2021. So massive revenue growth there. That indicates that customers are getting good value from Twilio services. And finally, a net promoter score of 33, which if you look at this chart here, a score of 33 means that it is great, a great net promoter score. So that means businesses are rating Twilio high in the question of would you recommend Twilio to another business, to a friend or colleague. And so that's good news there. A lot of evidence for Twilio in favor of its customer value. The next step in my framework considers unit economics. And for ACE, Twilio offers a software as a service. It has built in good economies in scale once large enough scale is reached. However, Twilio has not reached that point and it's reporting massive losses on the bottom line. Operating losses actually expanded from 66 million in 2017 to 916 million in 2021. So even though the revenue is growing on the top line, losses are growing exponentially more than that. So it's not like revenue is growing and that's allowing Twilio to reduce losses. It's actually revenue is growing and losses are growing even faster in proportional terms. So not very good news in terms of unit economics for Twilio stock investors. The next step in my framework looks at the total addressable market, and the communications platform as a service segment is expected to grow at 28% annually to reach 62 billion by 2029. The current market size is estimated at 11 billion for 2022, so not a very big addressable market opportunity. The next step in my framework considers competition, and Twilio has several competitors, including UiPath. Twilio is the lower priced option among competitors, one of the lower priced options, especially when compared to UiPath. But the complexity of these services offered and the features businesses require means that competition is not solely based on prices, which is good news for investors. When a business is contracting with Twilio or UiPath, price is not the only thing they're considering. They're considering how good of a fit the company is with the business and how well they can customize the services to fit the needs of the business. And so price is not the primary consideration, because when you're shifting from human provided customer service to automated customer service, there is inherently large savings associated with that shift over. And so even if one company might be a little more pricey than the other, compared with the legacy method of providing human provided customer service, there is still a big savings associated with that. The next step in my framework considers valuation, and Twilio, I had to use the price to sales ratio because the company is not generating consistently positive cash flows or consistently positive earnings, and so I chose to use the price to sales ratio. And if we look at the price to sales of 2.54, it's the lowest in its history, going all the way back to before 2017. So a little over 5, 6 years of history here with Twilio. And the price to sales, investors, this is the lowest price to sales you've been able to buy Twilio stock for. So looking at its own history, it's relatively cheap. And the final step in my framework looks at risks. And the macroeconomic slowdown is causing businesses to cut any discretionary spending, including software and investments. So businesses across the board are looking at their expenses and saying, where can we cut costs? And investments in new technology is one place where they could say, okay, I know we were planning on going over to automated customer service, but now is not the best time. Let's delay this investment for another 6 months, another 9 months until we have more clarity about our business outlook. So unfortunately, that's bad news for Twilio stock investors. And another risk is that management took back their sustainable long-run revenue growth outlook of 30% per year, saying that's now unrealistic. 2 years ago, management told investors that they could sustainably grow revenue 30% per year for the long term. And now, in this most recent quarterly statement, management took back that statement, saying that's unrealistic now. Arguably, that was the cause for Twilio's stock price falling significantly after it released its earnings announcement earlier here in November. So that's a risk for Twilio stock investors, unknowing what the long run growth outlook is now. It's not 30%, but management did not replace that outlook with something else. And if you noticed above earlier when I gave you the guidance for the total addressable market, we said that that's going to grow at close to 30% per year. So if Twilio is not growing at 30% per year on the top line, that could indicate it's losing market share to competitors. Because if the industry is growing at close to 30% and Twilio is not growing at 30%, that means it's losing market share. And that's a risk for investors. So now that I've looked at each step in the framework, let's give a grade for Twilio's step in my framework. Customer value, I gave Twilio an A. Lots of evidence of great customer value, including the great net promoter score, so they get an A from me in that regard. Unit economics, I gave Twilio a C. Massive losses on the bottom line despite solid revenue growth. They're not achieving economies of scale. At least there is no evidence of that just yet, and so they get a C there. Total addressable market, I give them a C plus here. Even though the market is growing fast, it's still relatively small in the grand scheme of things, so they only get a C plus here. Competition, I give them a B minus because of the fact that management said they're not going to be able to grow revenue at 30% per year over the next several years. And given that the industry is going to grow at that rate, that means Twilio, it is implied that Twilio is going to be losing market share to competitors. So I give them a B minus here. Risks, I gave them a C minus because of the poor outlook for technology investments over the near term due to macroeconomic slowdowns worldwide. So a C minus there on risk. And valuation, I gave Twilio stock a B minus because even though it's relatively cheap looking at the price to sales ratio, because I had to use the price to sales and I couldn't use the price to free cash flow or the price to earnings ratio, they kind of eliminate themselves from being able to get an A because they don't have earnings, they don't have positive free cash flows, and so a B minus here in this regard. All right, so in the next slide, I will be answering the question if Twilio stock is a buy. But before I move on, this is where I like to request that you all subscribe to my channel, because the recommendation I'm going to give is not a static recommendation. It's going to change over time as Twilio updates investors on their progress, on their earnings, on their business development. So as that changes, I will be providing updates on my channel. So this recommendation might change. So you're going to want to subscribe to get the up-to-date, most latest information on this recommendation. But for now, let's go ahead and answer the question, is Twilio's stock a buy right now? Twilio stock is not a buy right now. The massive losses on the bottom line, coupled with the relatively small total addressable market, coupled with the near-term risks, means that I'm recommending investors wait a little while before buying Twilio stock. You want to see more progress in their losses on the bottom line. You want to see the macroeconomic conditions improve a little bit, or you want to see further decreases in the stock price before we're going to recommend Twilio stock as a buy. Okay, so that's all I've got in this segment of Is This Stock a Buy? Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for all investors of all skill sets and risk levels. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 3 times. Go to fool.com/Parkev to get your 10 stock picks now.